What's going on today?
Hey, thanks, Scott. Hello, Andy. Hello, everybody. We're back.
Hey, Steve. Hey, Scott. Hi, everybody. We are
Yes,
back.
after like Jamie said yesterday, after a 2-week hiatus during a very successful test drive, we are back in the saddle for the trade of the week. Thank you, Dave. Thank you, Jacques. Thank you, Alan. All right, let's get started. The old disclaimer never changes. Just a reminder that Andy and I have been using trade ideas for a long time. We have our own accounts. We trade our own accounts, but we also happen to work for trade ideas. But all the things we're talking about here today, as far as market opinions and stock charts and stuff, that's all our own opinions. It's not to be construed as financial advice for yourself. So you're on your own. You got to pay the fees to the guys that like to take you to lunch if you want to do that. All right, so as I said, we've been using the product almost 18 years now from the inception. We've seen a lot of changes come and go. We understand it's a very rich product, and it's really not something that you can get your hands around in 24 hours. Honestly, it takes a good couple weeks. That's why we do the test drives, to kind of whet people's appetite. After 14 days, they kind of get a good feel for how to make the program work for themselves. But in the meantime, we also try and shorten your learning curve as best we can, and that's done primarily through Barry's live trading room, Monday through Friday, pretty much bell to bell at his leisure, his discretion, I should say. And then in the afternoons, one of us will take over and kind of give Barry a break and give you a different set of eyes and different opinions in our live support session. Yes, you can join the live support session at the URL below. That's a redirect URL right here. So once you attend the live trading support session, noon Eastern on YouTube, YouTube knows that you like that, and it will serve it up to you on your main dashboard if you've got a YouTube account. All right, so we'll just get right into it. The theme, as always, man and machine combined. Humans and machines work best together. Leaving them on their own, they kind of have a void. We kind of need each other. And in our case, the AI Holly, and of course, the customization tools that you can do to curate the live data feed fire hose that is our market, slow things down and put it into your wheelhouse the way you want to see it, whether you're a low float scalper or if you're just a swing trader who wants to look at scans, or if you want to use the AI for suggested entries. And then, as we always suggest, let the AI give you the entry idea, but you're better off managing it. We've pretty much seen the empirical data that shows that moderate mode, as we call it, or letting you guys manage your own trades with your own systems, seems to work out better. The AI can be chicken sometimes and get out too good too soon in good trades, we've noticed. So perfect example of the symbiotic relationship of the humans and machines working together. All right, so we will go through some of these items today. Market recap, look at sectors if we have time. I think we'll have time. The AI recap, Andy will point out some highlights over there. The trade of the week, it's been a couple weeks. We'll revisit a few of them and see how they've turned out. But this week is triggered, and we're just in kind of a holding pattern here in INVA. I'll talk more about that and how to manage that trade. That new trade was derived from a new iteration of the A table. I got some help from Michael Noss, and I think it's constructive help. So we'll certainly go through that, and I'll share that scan, of course. Don't worry, we'll hand that out. And then I figured we'd end up with maybe going through that scan together, kind of seeing what catches our eye, set some alerts. We can share those alerts as well, and then maybe finish up with some chart requests for what you guys want to look at. All right, so with that said, let's get started. We'll come back to that chart. Let's get started with the SPY. And RSP, by the way, I discussed this yesterday. RSP is a equal weighted index. It doesn't take into account the heavier weighting in Amazon, Google, Apple, Netflix, etc. So if you weren't aware of that RSP, you can kind of see it's interesting. We didn't make a new all-time high in RSP today, but over in the heavily weighted big tech stocks, they broke out to new all-time highs yesterday, and we threw a perfect doji in today. I'll tell you what, let's just start off with this right here. This is a doji candle. For those of you that don't know, we opened and closed in the same spot. It looks like a plus sign. Oftentimes, after you've seen a nice big move in one direction, sometimes this doji can be a signal. It can go one of two ways. It can be a day of rest and continuation, or it can be a decisive short-term top. And the way in which we will probably determine that tomorrow, if I can just, let's just zoom in on that a little bit, If we take out the low tomorrow and hold that low, stay below that low, I should say, chances are we're going to be back in consolidation mode. If the market just turns from this turn and burn, takes out the high and stays above, then it became a day of rest. Either way, we'll find out tomorrow, but it's kind of a critical candle in many cases, especially after a good run, which, by the way, kind of dumbfounded me. I was pretty certain that we were going to come down here and test that 50-day moving average like we've done so many times in the past. Oops. So many times in the past there you can see. This has really just been a don't fight the Fed market to the nth degree. The Fed really is controlling the price action, controlling the price action right now of everything. Every time the market seems to fall off, so one of them finds a microphone and the market grinds higher. But it's the channel of all channels. The 50-day moving average usually was the low end of that channel. But the buyers were impatient last week when we got down into this area. And I guess we could probably draw a line right there and we could say, that was a gap fill for the most part. The gap I'm looking at is right there, even though we kind of filled it here and here. So it was kind of a price action level, a pivot level. The moving average really didn't come into play. So it's just same old, move high, grind higher, have a quick little splash in the sink, and not a full shower, not a full bath, and find the buyers again and make a higher low in the meantime. So that's what we've got over there. The Nasdaq shows the same story, but a bit more oomph behind it. A little bit of green in the Nasdaq candle. That just seems to be where the money wants to flow. It wants to go into tech-laden stuff. And so the Nasdaq appears to be leading the way. It was a pretty good breakout there yesterday on that candle and closing above. IWM, as usual, is just kind of holding out. I honestly think it's just going to run right smack into this 50-day moving average once again, like it has the last few times. I'll be surprised if the IWM can break out of the 50-day moving average there and hold. This thing has been just going sideways for 6 months. I think what people have been doing is just selling the small cap stuff and rotating into the bigger tech stuff because that's what's been working. If you're scratching your head and wondering why the heck my OTC stocks are not performing like they were in the fourth quarter of 2020, there's your answer. It's just been a grind sideways. And I've taken a lot of focus off of the small cap stuff, that was working and just trying to focus on simple charts, regardless of what index they might be in. So that's that for the indexes. Pretty simple. Don't fight the Fed. Probably don't want to be short. If you're going to be short, don't be shorting the indexes because they just seem to find a way to keep moving higher. There's plays to be out there on an individual stock by stock basis, I'm sure, if you wanted to, but the path of least resistance remains up. But I also will say that it is really a stock picker's market. It's very hard to find the right one these days. And I think because the air is just so thin up here, this is like probably a 15, 16,000 foot hike up there, and the air is very thin until we can get some sort of a meaningful, I'll use the word meaningful correction, other than just channeling stocks.com, which is an old commercial. So that's the market view pretty much. Anything you want to add, Andy?
No, I totally agree with you. It seems like anytime we kind of break out the highs, we start to just kind of slow down and we'll pull back a little bit. But I think I saw the other day, I forgot how many consecutive, I think it's been over 100 days now that we haven't had like a 3% pullback or something like that,
We've
which
also
is
set
kind of
records
unheard of.
on. We've also set records on the number of new highs. I don't remember what the number is, but the number of new highs hit is just
Yeah.
off.
Well, that's what you're going to get on a slow grind higher. You're going to just keep getting on by a few cents and keep getting on by a few cents. So we'll see if there's any follow through. Are we going to pull back again? Time will tell.
Yeah. We'll take a look.
All right.
Liliana, I was just going to say Liliana's question says, you made a connection with the IWM and OTC. What's my rationale? My rationale is that the IWM represents the Russell 2000. The Russell 2000 is an index composed of small cap stocks. That's the reason they have the Russell 2000. So, pretty simple correlation to draw there. I guess I'll quickly go through it. Let's just do this because I think I can always find a couple of interesting sectors to watch tomorrow. China had a good day. I think Andy might expand a little bit on some of those concepts, but that's a pretty nasty downward reversal gap. They call that a pro gap. So keep an eye on some of the China stocks tomorrow. FXI is also an index that looks at China. Both of those had a pretty solid bounce this morning. We'll see what happens over there. But in the meantime, I'm just going to rush through these here kind of quick and see if anything catches my eye. A lot of messiness, and I'm looking for consolidation or trend breaks or something. And I'm just not quite seeing anything super interesting as of yet.
And that explains why everything's so difficult. Steve, you're sitting here going through sectors and they're so sloppy.
Everything is
they
in a
just
range.
pass the baton back and forth, and yeah.
And then, for instance, here's software index. Once something breaks out of a range, I really don't trust it because it just seems to want to drop right back down in. Yeah.
I see it with stocks all the time. Yeah.
Yep. Let's just continue here because, as promised, I did say we'd look at some sectors. Still nothing really jumping out at me as nice tight consolidation. The XL Energies, they did have a nice bounce off the 20-day there. There could be some more meat on that bone. I refer to the 20-day moving average as the backstop, and that will make a little bit more sense when we talk about the trade of the week. Everything's just tangled up, either in a downtrend, a side trend, or tangled up. We talked about the Nasdaq. Okay, we know that. Here's a great example, guys, of the lack of breadth I was talking about. There's just too few stocks making new highs, but yet the index keeps going higher, likely because of the heavy weighting that we've got. See, the Dow can't even get out of all-time highs there. Semis might have a little more meat on that bone, channeling stocks. Once again, channel. Biotech, it kind of clean, broke above its moving averages, maybe a couple days of consolidation. Keep an eye on biotech, perhaps. Gold just in a downtrend. There's technology just like the Nasdaq. Gold, again, probably going to run into a lot of trouble there in the 200-day moving average. Healthcare, well, I think the vaccine stocks are probably driving healthcare, and for whatever reasons, there's a nice trend there, but it's been consolidating over the last few days, and that doesn't leave us really with much left. I mean, this is the first time I've really seen nothing that jumps out at me in terms of a sector, so I'm just going to leave it at that.
Sure.
All right, so hopefully that answered your question, Liliana. That's it for the market recap. Don't fight the Fed. But be very, very selective in the stocks you choose, and don't try and ride them too long, because I think, as we just saw, we went through those sectors, things don't really seem to want to go in one direction for too long these days. It kind of reminds me, for maybe anybody over 45 out there, the old Ed Sullivan show, where the guy would come out and have the plates spinning on the sticks, and then one of the plates would start to falter, and he'd run over and spin that one, and then manage the others, and then run over and spin whichever one was wanting to spin. So enough analogies. Let's turn it over to Andy for the AI section.
Sounds good. Let me grab it. All right, and not a lot of trades today, which is fine. We saw this kind of yesterday. The trade count, I don't know. Today was, obviously, you look at the market today, and we pretty much, like we said, just a perfect doji almost. Just really didn't do anything. And obviously, after a big run like this is not unusual. We'll see what tomorrow plays out. So I think that's probably the reason why you had a very low trade count today. But with that being said, it was a decent day for sure. You had 6 trades. And before I go into the trades, I'm sure some of you guys have noticed, it may be that if you didn't launch a new channel bar, because I noticed that Chris Varley had all 3 of his AIs on his channel bar, but you should only have 1 on there now. We're getting away from 1 Holly to 2.0 and Omni. We're just going to give you 1 AI. I think most people, they want to look at everything that comes through anyway, every alert that comes through, and we've been lobbying for this for quite a while, and finally Dan, I think, kind of agreed with us, Dan and Brad. So I think it's good. I think it's good just to have 1 and not confuse everybody with, oh, what's this one do? What's that one do? So with that being said, like I said, there were 6 trades today. I'm definitely going to elaborate on this one, but first let me just this RAAS. But first, let me go over the kind of nice trades today. It was JWM was a nice little range break. It was actually called right before it took out yesterday highs, and you had basically a nice, what is that, about 80 cents move on that one. No pain trade. which means it never went against you. So that one was a nice, easy one if you caught it, to ride that one out for some profits. This PNW, boy, you had a little more bang for the buck. Yeah, this really didn't do a whole lot. That was, I mean, you're basically got, gosh, man, is that right? That's only 47. Yeah, so basically about 35 cents. So nothing, even though it looks impressive on the daily chart there, it wasn't that much of an impressive move. But with a low stop, you could have bought some decent amount of shares and still, made you $100 or so. Clicks, another one here that looked like it was a long that finally you had to hold this to the end of the day to really get that moving. So really not a lot, like I said, not a lot to write home about today, but I do want to point this one out. And the reason it is I had one of my better days today of the year, and because I was trading a lot of China stocks. I used to do that a lot, 20 years ago. That was one of my sectors that I traded very well. And I've been waiting for this kind of bounce, had some stocks that I was looking at, some bottom fishing. I'm not afraid to do bottom fishing. And then I saw this one on Holly, and I didn't even realize it's a China stock. But if you go into the profile, you're going to see they are located in Beijing, China. And so this is a China play. And this is one that I bought today and I'm hanging on to. I got several that I'm hanging on to, sold, took some profits on a lot of stuff, but seeing if there's going to be a continuation in the move. But look how much this has been beat up over the months. Okay, that alone will not cause me to jump in a trade just because the stock's beaten up. But not too long ago, I did a webinar talking about how I love for stocks after they've been beaten up for a while to actually form kind of a base for about 6 weeks. And today you had this, it didn't quite close on highs, but close enough for government work, they say, and you had a nice little volume bar. This is one that has a potential to have some follow through tomorrow. So might want to keep your eye on, if you're not in it, maybe keep your eye on this one tomorrow, because if some of these stocks do, like I think they could do, there could be a very, very nice bounce over the next few days. And interesting enough, this had earnings on this day right here. And you can see the volume bar tried to push up, but I think what happened is the weakness in China was just too much for a lot of these stocks, and they were just getting crushed. And I also like, if some of you guys know what, when I do look for stocks that potentially may be bottoming, something I look for is what I call a final flush out. And I will show you right here. It trades sideways, had good earnings, and what happens is it turns around, does a final flush to flush all these longs that may have been in here out, for the last month, and then bounce and then move higher. So you want to keep your eye on this one, because I think this one may have some follow through. We talk all the time that these are great ideas. When you see Holly has to get out at the end of the day, so she basically is day trading these calls. Well, she's not, she's just alerting you, but she does close out of her alerts at the end of the day. But you as a trader, man and machine, this is where you can take over and say, wow, I like this. This is potential bottoming right here. I'm going to maybe hang on to this. And just to show you an example before I pass it back to Steve, one of my better trades of the day, and I tweeted this morning, but what is it, Steve? Hippopotamus.
Hippo.
Yeah, that's hippo. Gosh, couldn't draw it to my attention. But here's a great example of a stock that was kind of trying to bottom out, and there's your one little flush out yesterday to kind of flush out everybody below floor again. I mean four again, and then it pops back up. This is one that I actually bought yesterday. Then I kind of added to it today. Sold some and still in some, but look how many days in a row this thing has sold off. 15 days in a row without a bar reversal. I was actually expecting more out of this. Just didn't get it. I'm hoping there'll be a continuation on it today. But a lot of times when you see this one, obviously it's a IPO, so you're not going to have a month-long base or whatever. But still, this is so common. You see a lot of times these last kind of flush outs when a stock's basing or putting in a bottoming pattern. I'm having a hard time talking today, Steve. Must be the COVID.
It was all the time off.
No, I think you're right. All right, but that's about it, guys. Not, all that impressive, but still for, winning trades and in conservative mode, you basically didn't have any losers. You did have one in moderate mode. So that being said, I think conservative outweighed moderate by about $100, $160, according to my trade count over here, or trade allocation, I should say. All right, Steve, I'm going to shoot it back to you.
Okay.
If I can remember how. There we go. Yeah.
I'll just make myself presenter. Here we go. Yeah, I want to just second that opinion. Andy and I usually see the same things, and every day I'll go through the AI trades and see what's in there. And the one trade that stuck out to me was this Ross. I mean, we've been looking at, let's just look, JWN, mess, back and forth, click, mess, back and forth. Actually, that's not that bad. I'm sorry, I was trying to say PNM. Got ahead of itself, but this Ross is very tightly coiled, and it's a very nice rounded bottom. And I agree with Andy, sometimes they just have that one last little fit that they need to put. A nice increasing volume yesterday and today, good bottoming tail. I think you want to watch this one tomorrow. Mm-hmm. So maybe put if I were you guys, maybe just right click in your chart and create a price alert right off the top of that. I'm not going to do it because we're going to do some more price alerts, but yeah. All right, so let's get into the trade of the week. It was derived from a new scan, which I'll touch on after I talk about the chart here in a moment. And it came up on the weekend, INVA. Again, same kind of a method we've done a lot of times. We're looking for stocks that might be ready for a short squeeze. So here's my single stock window showing us that 34% of 100 million shares in the trading float are held by short sellers. Now, sometimes when trades get this heavily on the short side, they can start to whack out a little bit. I mean, pay attention to all these little simple candles down here. Then all of a sudden, the candles start getting a bit, we call it average true range, really starts increasing. And wouldn't you know it, yesterday, and I think there's probably a bit of, let's just go into that. There's probably a bit of front running when people get the email for the trade of the week, put in pre-market. The green line right there is in fact our trigger, but you see what happened was this thing got pretty active pre-market, and it's a bit volatile, that's for sure. Now, the trade of the day, the trade of INVA started the day and the regular session above our trigger line. Now, for those regulars, know that I don't like that. When we have a gap up, it forces us to kind of call an audible, like a quarterback in the front line of scrimmages once he sees the defense. Ideally, we want to trigger from up underneath and come up underneath and trigger and carry the momentum higher. So when we have gap up days, you got a few choices, usually 3 choices. Choice number 1 is to just go ahead and buy the open. I don't recommend choice number 1. Usually buying the open on the gap, you're probably going to be disappointed. Excuse me, it's right there. It's that one, not the green one. That was pre-market. Choice number 2 is to wait until it fills the gap. So let's go back and turn off so we can see a little easier. We'll turn off pre-market. Choice number 2, there's choice number 1, buy the pre-market, usually not advised. Choice number 2 is to look at maybe buying when the gap is filled. Choice number 3 is often the 10-period moving average here on my 15-minute chart, which in this case was really one and the same for filling the gap. Now, what I would recommend is if in the near future we have another call that gets ahead of itself in the pre-market and hopefully you don't chase, what you can do is you can just look at the gap here and or choice number 3 where you think the 10-period simple moving average might be picked up if a gap starts to fill, just put in a limit buy order for that level. And the reason I'm calling that out is because this happened really quick. Okay, this was a very volatile open. And again, I don't know how much of it had to do with the email going out, but nonetheless, that's what we had. So if the right way in hindsight to play this would have been, I'm not chasing up here. I'm just going to put in a limit order right down here where pretty much yesterday's close was. And if you had done that, you would have gotten a much better fill than our trigger price and feel good about yourself that you bought not chasing, but you bought at your price. No, this was not a short on it, Liliana. This was a long. So let's defer over to the daily chart now. I wanted to kind of give some color on the open and how it opened yesterday and how you want to play those gap ups when they gap above our trigger price. You can either chase it, not recommended. You can buy the gap fill, or if the 10-period moving average is coming up, I would use that one. I would always play off the 10-period moving average. That would be my favorite indicator to use to try and gauge a nasty gap opening. All right, so once again, very volatile. I didn't see that coming, quite honestly. Let's show you, I like to show you what I see on the weekend when we call these out, and that's what I saw on the weekend. Let me turn this price alert off now that we've made that reference point. Okay, a nice trend. Obviously, the short squeeze was probably on back here. We had earnings July 28th. That's pretty much when it took off. So it responded very positively to earnings on July 28th right there. And the shorts were probably running for the hills. Now, you can see the first test of that moving average was a nice one. And that's really what we were kind of hoping for again here. Just like we had a nice bounce there. We were really hoping that this would be a nice, we're not chasing up here. We're waiting for 2, 3, 4 days of pullback, kind of bounce off that 10-period moving average and we just used the high of the Friday and anticipate a move higher. Well, it doesn't always make it that easy for us. But if we look closely at the email, it reminds us that the risk management is to not let the price close under the 20-day moving average in red, currently then around 15. So we're basically in a holding pattern here. Let's move forward. There we go. There's yesterday's nasty candle. And as mentioned earlier, we had a perfect doji. There's nothing wrong with that perfect doji because it traded and closed above our 20-period moving average, which I'm going to affectionately remind you, I call this the backstop. Because when this thing, the momentum line is the 10, the backstop's the 20. That's kind of my little pet names for them. When the momentum line breaks and they try and shake people upside down, and I think that's kind of what was going on, the algorithm said, oh, you guys want this stock in pre-market? That's good to know. Well, we're just going to play our games here for a few days. But as long as the price does not breach and close below this 20-period moving average, we're still okay. So we're just in management mode here. And for the most part, I guess we could call that what do we call that? It's probably about 55, 60 cents or so. But I would like to have gotten back up above here, but the backstop is holding. And as long as we don't close below, be aware that there could be a test where the price reaches down tomorrow on the open, maybe touches it, and tags through it 5 cents, but we want to see it clear out of that level quickly. And we want to make our decisions for trade management at the end of the day, ideally, if we can. So I fully hope and anticipate that this red 20-day moving average will hold. We've seen kind of a lot of examples of that lately. Last year it used to just be a little easier where we would bounce off the momentum line, the 10-period, and then it would just wash around for a few days and maybe 2, 3, 4, 5 days even, eventually pick up that red backstop, as I'm calling it. But as long as we don't close below it, the trade is still on. All right, anything you'd like to add to that, Mr. Andy?
No, Steve, I think you covered it very well. I agree. I mean that the 20 period, it's hard sometimes. I know, guys, if it's very volatile and you get a really hard push below that 20 to hang on and see how it closes. But sometimes you just got to go with your gut. I've seen Steve and I both, do it both ways. We'll wait for it to close, or if it's late in the day and it's not looking good, we'll bail. But
the market's weak,
anyway,
yeah.
In the markets, sure.
Yeah, always extenuating circumstances to try and bring in to the picture. All right, so where did this trade derive from? Well, again, I teased you in the email and earlier with the A table 2.0. Been working off of the A table. Let's start with that one. We'll go to configure and look under the hood here. Very simple, and I kept it that way for a reason. However, there's always room for improvement. In the past, I said, I'd like a stock composite rating of 80, which means 15 or so different filters combined together to give us a composite score. And just think of it as a college grading curve. 80 is going to give me the B and A students. Nothing below a B student will fall in. That's why we call it the A table. The short float, I made a minimum of 10%, and the average daily volume has to be at least, I believe, 1 million shares. So very simple. Well, Michael Noss here, who's kind of our resident math nerd and a CMT holder as well, pretty smart guy, said, I think I made a couple of interesting improvements to you. And on Friday, when I started looking for trades of the week, he submitted this, and I said, I really like some of these names on here. I forgot the one that was on top. It wasn't VXRT, but that's not a bad looking chart. We'll come back to these, as I said. Actually, it's not even on there right now. INVA is not on there, and I'll show you why. Configure. Okay, so this is Michael's addition to kind of what I had already had. And right off the bat, we notice he lowered his composite rating to 70. You know, Michael doesn't mind taking the C students. That's okay. He actually lowered the short float. This is really not significant. 5, those are all buried down at the bottom of the scan. But here's where INVA fell off. Have to be above the 10 SMA. So what he's done, just to kind of encapsulate what he rounded up for us, is saying with this filter, we're not going to see a lot of mess. We're going to see stocks that are above their 10 SMA. And again, as I showed you 2 days ago, it was resting right at that 10 SMA. So it was staring me right in the face. And that's really the way these scans work. It's like a jump rope. You just got to go through them and see which ones where the rope might be up at the top, or you got the ones where the rope might be right down at the ground level, and you're ready to jump in and start participating. So first off the bat, that's the change he made. It's got to be above the 10 SMA. And I agree, that's a good change. But notice up here, he's got some Bollinger Bands. In the daily Bollinger Bands, a max of 90. So what he's thinking is, we don't want to see stocks that are overbought, that are pushing through their upper band. Never a good idea to buy stocks that are overbought after a long run. So he's just capping that at 90. Everything below is okay, but he did the same thing as well on a 60-minute time frame. So he's basically saying we don't want to see these stocks too overcooked or too overbought, either on the daily or in the 60-minute time frame. And then lastly, a position in 20-day range, we want to be, again, not overbought. We want to have a little bit of meat left on the bone, hopefully. And so 90 percentile is the 20-day range, which means 0 is the 20-day low, 100 is the 20-day high. We don't want to see anything above that 90th percentile. They might be a little bit overcooked. So that was his thinking on that. And before I forget, we will certainly share this scan. I'll just go ahead and drop it into the chat window right now for those of you who want to collect it. A-Table 2.0, Steve Gomez, Michael Noss combined. All right, so yeah, that's the A-Table 2.0, and we went over the nuances of it. So what I wanted to do next, I think, is a perfect segue. Is, as I said, these scans are kind of like the jump rope. We just want to go through them, kind of like I did with that sector scan a little earlier, and see if anything jumps out. Now, what am I looking for? I'm looking for consolidation. I'm looking for things that look like close to that on the INVA. Let's see if we can find anything. So zoom back out. Again, we'll start with VAX Art. I'm going to go ahead and bring up my price alerts. I'm going to clear out my price alerts, and we'll set a brand new list. And again, that list will be shareable, and I'll share it with you guys as well. So you don't have to set them along with me. You can kind of pay attention. So let's go through it quickly. Now, again, I'm going to give more weighting, really, to the ones up here in the top, the darker colored ones. Why is that? Because those are the ones that are more likely to have a short squeeze. I mean, we're at 34%, I think, in INVA, the trade of the week. That would be at the very top level. All it has to do is get back above its 10-period moving average, and it would be the top list, because we're sorting here by short float. So I'm going to kind of quickly go through here, and I'll stop on things that catch my eye. So I'm going to give a little bit more weighting to the ones that have a really high short float. And I'm going to go ahead and just really start off with just putting an alert on this one. I think that one could have a little bit more to go, but we'll find some duds as well. Okay, I kind of like this one too. I like the way it kind of popped up. Got a nice bottoming tail there. I'm going to mark this one up too. And again, I'm giving more critical heavy weight to the ones up top because they're more likely to have a short squeeze. LPSN, I could go either way on that one. Let's go ahead and see if it can get above that level right there. I don't want to get too aggressive on setting too many stops here. So I'm going to start to be a bit more discerning here. Did you want to say something?
Oh, yeah, just your A table didn't make it in, the code didn't. So,
Oh, you know
no.
why? Because I didn't paste it.
Ah, okay.
No, I did.
There it is. Okay.
Start talking and I get ahead of myself. Thank you, Liliana. Appreciate it. And Dave, too. All right. Gosh, I kind of like this one. Why do I like it? Because it's popped up above 2 days in a row and it's kind of settling. You could go sideways for a couple days, but let's keep an eye on this one. But again, we're starting to go down the row here a little bit. We're going to have to be a little bit more. I kind of like this one too. These ones at the top, they're hanging in there. I'm going to just probably do that one as well. All right, let's see what else we've got here. Zoom out a little bit. No, that's just in kind of a choppy downtrend. Choppy. Nah. This looks like a new issue. We've only got a little bit of a blue 50-day moving average here. Blue new issue. Yeah, I'll keep an eye on that one. It could be kind of forming a little wedge there. Edit. Too spiky.
Pretty strong, but yeah, it's spiky.
Yeah. I'm going to start being a bit more discerning, as I said, as we get down here. This one's interesting. The last 2 days have held above the 10-day moving average. Let's just see if we can take out a big price level there. We want to be alerted to it. And oh, I like this one. I can't pass this one up. Why do I like this one? Why? Because we had a nice move up and we just been consolidating right there above that 10-period moving average. I don't think we can let that one go either. Put that one maybe a head start just below the regular high. And honestly, once we get down to like the 10% float, I'm not going to be as interested in a lot of these because they're just charts. I don't like the way that thing trades. It fools you and then it pulls back, but I'm gonna mark it up anyway because I like that moving average. Just be aware that these stocks can have a personality. What do I mean by that? That means they fake you out and then they go back down. Okay, this one is guilty until proven innocent. Foreigner, downtrend, no thanks. Mess, no thanks. Lithium, this is one of Chris's favorites, right? Varley? I think in honor of Chris, we'll go ahead and mark that one up. You know, electric vehicle, this is lithium battery. So if the EVs really start taking off, pay attention. Maybe that one's gonna do something. Nah, it's kind of a mess. Nope. Interesting. I kind of like it. Look at how, guys, how it took out the momentum line. Like, let's just go back in time and do the time machine here. That's a juicy looking chart. That's what we were hoping for INVA. We didn't get, but as I told you, it busted through. Where's the backstop and how does it act at the backstop? Oh, it touched the backstop and back in play. I'm not going to mark this one up, but I'm just going to use that one as an illustration. Didn't really care for that big tall wick there, but that's a good example of how the backstop can work for you. XSPA, familiar with that name, but no thanks. Dish. You know, also kind of messy, but we're starting to get down here into the, you really got to show me a good chart land because as we go lower, the short sellers are less and less likely to be squeezed and scared. Curious to why AEO is a pass? That's a good question. Let's go back and look. Oh, it's just that's a messy chart and it's below all of its moving averages. I'm looking for moving averages that are turning up, sloping up, and price action that's got a good couple days, 2 or 3 days of close above that moving average. Where was I? I think I was at XSPA, Dish, WETF, yeah, LAC, LA Clippers. Okay, so this thing might have a little, let's go ahead and just say this is better than AEO because it popped back above the moving averages, which are starting to slope back up again. We got 2 days of closes right there in clean air. I call it clean air when you're above those moving averages. You're not getting tangled up. RVLV, nothing. It's a good question, though. I like that you said that. Why did you pass on that? That's always a good question. This thing is below the 200-day moving average. I'm generally not interested in things that are doing that. Look at the spikiness of this, the personality of the stock kind of coming in there, and there's just no real short squeeze potential. And now we're into that 10% level where these are just stocks on their own. So I'm going to go ahead and just stop there. And I don't really think there's probably much to look at under here. So what I'll do is I'll say we're going to run into the last segment here, and that is chart requests. So if you have chart requests, you can start throwing them into the questions box. In the meantime, what I will do is I'll take my price alerts, and you can see we set a few, maybe 12 or so. All you have to do is receive the cloud code that I'm going to share here. And I promise to paste it this time. Copy all, call it A table 2.0 price alerts. And there is the cloud for that one. All right, so I will minimize that. Maybe we'll revisit that next week. We'll see how those worked out. But you know, that's what I think was probably new and improved that we could talk about this week in terms of for swing trading again. I'm not a day trader, and well, Andy wasn't until today, but that's a different story. Oh, yes, that reminds me. Thank you. I want to go back and revisit a couple of our past ones. Kroger really was doing the best of all. I think we all understand the price inflation that we're seeing. Kroger, that was a trade that we, if I can peg it, there we go. That's the kind of stuff I was looking for. This would have been the best looking chart we've seen all day if it had shown up on the A-table scan, but a beautiful push higher, consolidation lower, lower high, right above the momentum line. And then that thing really worked. And there was honestly no reason to get out. And I say that because it didn't close once. Oh, now mind you, nothing wrong with taking half off the table when things really start going your way, but holding on to that other second half can really pay dividends if you just use the trade management of I will stay in the second half or the remaining third until we get a close below the rising 10-period moving average. That's when I would be getting out. So that one worked out pretty well. I think Twitter was a trade, but it never triggered. We'll check in on that. Thank God it didn't trigger. It's just a mess. What was the other one? Gosh darn it, I'm trying to think. It was Cliff. Thank you. That was what reminded me. David. So we'll just start with David. David's question, he wants to look at Cliff. We liked Cliff back there, okay? And it did what it was supposed to. And then look at what happened. The day it closed below its 10 period, yeah, put up a little fit and start here, but it can't get back above. However, today, probably squeaked just above. It might be still in play, David. I wouldn't knock it, and look at where it found its support at the 50-day. Blew through our backstop as well and found the 50-day. If it can build on it tomorrow, maybe a close above 25, and you might be looking a little better in that one. Can we apply moving averages to a sideways market? Navreen, it doesn't really do a whole lot for me, except like maybe Andy has an example off the top of his head where it pops up into like a 50-day moving average from underneath. That would be your signal to probably get out if you were in. Or if you like to play ranges, maybe that's a signal where you can use that sideways action as it had 3 or 4 days of movement up into, and then a nice topping wick at the 50-day moving average. Those can be short sells. As I said on the onset, there's nothing wrong with picking individual stocks because there's some individual names out there that you can make money shorting. It's just not really on people's mind lately. So yeah, good question. Pfizer and roll. Okay, so Pfizer just broke our rule, didn't it? If I've been long Pfizer down here counting my money, today's the day I probably want to get out and book that profit, okay? I think the momentum may have stalled. So the backstop is now in play for Pfizer. And this is probably a great case, Andy, right? Of buy the rumor, sell the news. What's the news? The booster shot. Booster shot. Okay, that's the opportunity to jump in.
And approval too.
Excuse me. Yes, thank you. Booster shot and approval, and jump in, and all the people who chase the news, you can sell to them and get out of the big guys are probably getting out of some big positions because they know the retail is coming in, reading headlines. So that's what I think is going on there. Roll spiky, but it's showing life. It's got even kind of a bracket thing happening there. It's got, you can call that an inverse head and shoulders, a bit sloppy, but see if you can build on that. I think the idea is to keep probably above 60 there, maybe a little consolidation. Okay, toll, roll, not toll. Oh, I'm in toll. Thank you. Thank you for catching that. One click away on the keyboard. and you can just blow it. ROL, not TOL. Okay, a little different story here. Ideally, today's the day that the buyers should hold this, the bidders should jump in and hold that as a higher low. And it makes all the sense in the world, because I'm sure you saw the same thing, and that's why you typed it, Dave. The 10 and the 20 are there converging, probably building a little double solid wall. So really need to hold that. Let's see what it looked like intraday. It looks like 38 is kind of the line in the sand there. So I would use 38 probably to key off of it. If it wants to close below 38 tomorrow, you probably don't want it. All right, a couple more, and then we'll bring in stuff. Oh, a double up. So Waleed, yeah, I got you for game. Let's take a look at game. Definitely something going on over there today. The meme stocks, he didn't toot his own horn, but he made some good money in AMC as well again today. The meme stocks kind of came alive. I'm just going to say day and a half. If we have any follow through tomorrow, I think it might be short lived. Might even just be right up here to the 242 level going back. I wouldn't want to trust this too much. Today was really the money-making move. Maybe a little bit of follow-through tomorrow, but by the afternoon, there could be a lot of profit taking on that one. All right, it looks like we made it through. So very good questions today. I appreciate it. The info at trade-ideas.com. If you're watching this on the replay and you want to get the cloud codes that I dropped, we can do that for you as well. Let's go ahead and bring in Scott for some final announcements.
Yeah, thank you. A couple things on the way out. Make sure you've got the new Strategy Indicators ebook. It's got some great tips from our Director of Software Development, who created the AIs and the backtesting module in Brokerage Plus. So check it out. It's at tradeIdeas.com/strategy. It's a free download. Go get it. We've also got a sale going on through this Sunday to celebrate the successful test drive. Use the code TestDrive25, save 25% off that upgrade to premium or any new subscription. So go grab that before it expires and get started with us. You can find Steve on Twitter at TISTG, and also find us at Trade Ideas, at QuantBot, some other handles you'll locate. If you follow one, you'll see the others. Trade Ideas Pro is our Facebook handle. And any questions at all, send them to info@tradeIdeas.com. It goes into our help desk software, gets you the answer you need as quickly as possible. So you'll get a replay of this by email tomorrow from GoToWebinar. You get a link to the playlist where you can find it. So check that out if you missed anything. Thanks, everyone. Thank you, Steve. Thank you, Andy. Have a good one.
All right, see you next time.
Thanks, everybody. I'll see you on Thursday. Bye-bye.